All right, my thing is this, right? Because I know a little bit about your industry, right? Just the surface level.
Let's talk about it.
All right, cool. So my thing is, I was introduced into whole life insurance very early,
Okay.
right?
Yeah.
I know there's other life insurances, but my
Right.
thing is, what attracted me to that was I could grab this money out when the cash value grows. I'm alive. I like using money while I'm alive,
Yeah.
right?
Absolutely.
Then I see a lot of people say, "Oh man, when you compare the amount of money you pay with
Yeah.
whole life insurance, you
Right.
can
Yeah.
put
Yeah.
that in the market, blah blah blah,
It all
make this
sounds good.
money, yeah,
What
all
happens when
this
the
stuff."
market crashes?
Right.
Okay. Cool. Well, I'm gonna have to
Right,
keep
right,
going.
right, right. So, what's your like? I don't want to say so, but like, you trying to get somebody a certain type of life insurance. How do you know which one to give this person? Like,
The first thing I tell everybody is, no matter what insurance you have, is good insurance.
okay, that's a see that. Damn,
Why am I gonna tell you that you should get this or that? Everybody's situation is different.
that's true.
Everybody's specific situation is different.
Mm.
So let me elaborate for you now. In that sense, if whole life for me, what I try and explain to people is designed for you to help generate wealth.
Right,
Yeah, you could take the money out when you need it, but again, it's the only guaranteed thing. See, people that tend to forget. There's a part of whole life that people forget.
right,
Guaranteed whole life.
right.
Right? You got to break it down.
Yeah.
Guaranteed whole life. 3 words. It's guaranteed for your whole life.
Right,
You understand
right,
what I'm
right,
saying?
right.
Okay. So that's really permanent protection. It's permanent. You're gonna pay a little bit more for it.
Absolutely.
But let me compare it to something for you.
Go ahead.
It's like owning a house. You're gonna pay a little bit more for a house if you own it, right?
It's true.
Okay, but it's yours. You can do what
Absolutely.
you want.
Right.
You can pull equity out. You can pull money out of your whole life.
Right.
Okay, cool.
Oh, good comparison.
So that is that.
Right.
Right? That's that. If your situation dictates that you need whole life, and that's what your situation dictates.
Okay.
I'm not going to be the one.
To be like,
No, we're gonna assess your situation and see what you need.
got you.
You understand?
Got you.
Okay. Term. I don't have a problem with term. A lot of people have problems with
Yeah,
term.
that's what I'm saying.
And then the term people got problems with whole life.
Yeah,
I don't
it's like a
understand.
beef
It's
within
like,
the-
it's like a game. I
Yeah.
don't understand, right? Term is good.
Yeah.
Term is good. But you gotta know the ins and outs of term,
Right.
right? The reason why term is good is it's gonna protect your assets. You have children, get some term. You have a mortgage, get some term. You have a lot of assets in place, get some term. Yes, you're going to pay a little bit for a lot, but it's not guaranteed forever.
Ah.
It's temporary coverage.
Gotcha.
Right?
Yeah.
So with that being said, it's only good for a certain amount of time.
Right.
Now some people will come and say, hey, you gotta get term.
Right.
Well, the term has an expiration date.
Yeah. And then when that's over,
You either have to start over at your new age and your new health.
which is
And
going to
pay-
lead to
You got to pay
More.
more, right? Because life insurance isn't bought with money; it's bought with health. Bought with health. Like let's get that out the way. Life insurance is bought with health; it's not bought with money. Okay. So with that being said, you're at a different age.
Yep.
You're at a different health status.
Yep.
You're gonna pay more money.
Got it.
Okay. It's that. In addition to that, you can look this up for yourself. 99% of term policies don't pay out to a beneficiary.
What you mean?
Look it up. 99% of term policies don't pay out. Why? Most people outlive the.
Term.
But again, anything can happen. Because for that one person, listen, we're in a room of 100, and one person got that term paid out,
Yeah.
they still got that term paid out. Let's never get that twisted as well.
Okay.
So that's that. And they also have universal life. But universal life, I would say, is just a combination of both. That's
Okay.
the easiest way to break that down. But it's usually most of the dramas between the whole
Yeah.
lifers and the term lifers.
Got you.
understand?
Yeah. Nah, it is because that's how
That's
it was
what it
kind of
is.
presented to me.
But here's the thing. I'm not going to tell you, hey, you have to take this or that. We have to really assess your situation and see what it dictates. To me, personally, term is like renting, right?
Yeah.
Renting is fine until you can afford to own.
true.
What's the problem with that? Get a term until you can afford a whole life.
Right.
But in the same sense, understand the benefits of whole life.
Right.
You see, what most people don't know about whole life is, you got a 7-month-old. Would you say your son likes Disney? Is he like Disney yet? Is he a Disney fanatic yet? Or is he more of a Coco Melon?
Hey, I
YouTube
heard bad
for
things about Coco.
Hey, listen, everybody's.
Look, but let me stop.
We got a preference.
He's a
Was he a Disney kid yet? Or not yet?
yo. There's this thing called Gracie's Corner.
Oh, I got Gracie's Corner on all the
Yeah,
time.
so
Gracie's
like
Corner's on in my house 24
yeah,
hours.
yeah. So like he's been messing with that lately.
No, it's you that likes
Yeah.
it. It's you.
I do because mind you, yo, he learns a lot.
Yeah.
And there's some other anime and cartoons I know, but
I do Gracie's Corner myself. I got the simple songs as well. That's what my kiddies listen to.
yeah, see, so he's still figuring out.
Okay,
Which
so
one you
watch
wanna
this.
do?
All right, so let me go with Disney first and foremost. This is what most people don't know. You can look this up, right?
Okay.
This is literally, look it up. This is not a race special, literally. Okay. Disneyland, the foundation of Disney. No, I'm sorry. Which one's the bigger one? With the world, right? Disney World.
Disney
Right?
World.
I'm sorry. Disney World.
Yeah.
The down payment of Disney World came from Walt Disney's whole life policy. He pulled the cash value out. He added it to whatever he already had, and that bought the initial Disneyland. J.C. Penney, same thing. Took the whole life policy out. Took care of that. Master P says it all the time. His grandfather left him
Yeah,
10,000
$10,000 off the insurance.
from life insurance, and he ran with that. You understand? So people don't understand that you use life insurance as the foundation to build. You use term as the security for what you built.
That's it right there.
You understand?
That was not broken down to me like that.
That's it. So it's just got to be where you. That's why, again, you have to assess where you're at. Do you have something built? Term. You don't have anything?
It is situational.
You don't have anything?
Yeah.
Whole life. If you could afford it.
Right. He kind of. It was kind of told to me like
Right.
he didn't get into the term part like how
Yeah.
you just did.
Of course not.
Right.
Because then once you get whole life.
Yeah, right.
This is the thing. Once you get whole life.
Right.
That's
right,
what I mean. I'm going to break it all down.
Right.
And I'll pick what you want.